In this video, I will explain how the financial media lies to you right now, how any predictions about the markets are provably impossible to make, and how the current circumstances could send all of crypto up like a rocket, but how you may not want that to happen. Intrigued? Let's begin. This is the first clip I saw in the news today, and it really got me going.
Our banks are the safest banks in the world because we have just been told by China forever, good luck, you're not coming in. So I can sit here and watch all our banks go down, Carl. But you know what? I am going to say this is the silver lining, the playbook silver lining, although the Eagles look terrible, of what I regard as being, it's the other side of, hey, you're not allowed in. They need us so badly, but we're not going to play because there's no reason to.
Is it me or is this guy off his rocker drunk in this clip? I will admit, I wasn't too familiar with the antics of Jim Cramer, but a quick Google search informs me, worst thing to happen to the financial security of average Americans since the crumbling of the social security system. And honestly, I can kind of see why. These are lies. Here's how, and why he might be making them. Firstly, his claim of safest banks in the world is a little condescending to our presumed lack of intelligence, supposedly having forgotten that the worldwide financial crisis of 2008 was caused principally by banks in the US. A situation he should be intimately familiar with considering his spectacular failings at the time.
Should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning.
Also, this claim of safest banks worldwide is empirically false, whether using industry standard ratings or even by total assets. So where he gets that idea from, I don't know. Whatever. That may just be his personal opinions, but his claims of lack of safety due to a lack of connectedness by being unable to enter the country is very similar to a deceiving tactic used in the media during the last financial crisis, where we are supposed to think a contagion cannot spread due to a lack of direct connectedness, which makes sense, but actually has very little to do with how a contagion spreads, and everything to do with our highly leveraged monetary system, which is at risk. But why oh why would a mass media financial advisor and ex-hedge fund manager potentially lead us astray? And why does he still have a job? Genuinely ask him. Well, maybe he's just that entertaining. I don't know. But something that's important to understand is the business model of financial institutions, whose sole aim is to make the most amount of money possible.
What have I told you since the first day you stepped into my office? There are three ways to make a living in this business. Be first, be smarter, or cheat.
While I could show you many examples of cheating, potentially the most hard-hitting one for you watching will be Jamie Dimon's comments, CEO of America's biggest bank. In 2017, regarding Bitcoin, he said, "It's worse than tulip bulbs. It won't end well. Someone is going to get killed." Wow, I'm glad I didn't die. I appreciate that he tried to save my life. Doubling down, he would fire anyone dumb enough to buy some. And then in 2021, Jamie Dimon quietly unveils access to half a dozen crypto funds. Actually evil, actually sickening. But that's how they fulfill their prime directive of making the most amount of money possible, getting the masses to sell cheap and to buy high. Which of course enforces indentured servitude, meaning you have to work for as long as possible, putting off retirement later and later because that's what's better for their economy. Of course they would disagree with me.
We are selling to willing buyers at the current fair market price, so that we may survive.
Man, that got really dark. I apologize. Jim Cramer is currently telling us to sell, so that's at least a positive. Maybe Jim in isolation isn't all that scary, isn't a paid actor, actually tries to help people. But understand that strong positivity about issues in the financial media, especially from hedge fund managers, probably means they want to sell at the front of the line and get their shorts ready. It works vice versa also. Which is why I'm dubious about the current events. The Evergrande situation and a potential recession is all anyone is talking about this week in the financial world. Are we really meant to predict a global recession coming miles away? That's not how recessions have previously worked. have they? The famous quote is that 9 of the previous 5 recessions have been correctly forecast, because they forecast them all the time. In actuality, very, very few recessions are predicted correctly more than a month or two in advance. A month! So basically you are standing outside, rain falling on you, and a forecaster predicts the potential of a downpour. Great, thanks. But there is the yield curve, which does accurately predict recessions.
You can see that predictive power on this chart. It shows the difference between the long-term 10-year and short-term 3-month Treasury rates. When that line goes below zero, it represents an inversion, and those inversions have preceded every single US recession going back 50 years.
Here's what the curve looks like today, normal. But the odd thing is, the thus far practically 100% reliable indicator of recessions was incorrect when it predicted one towards the latter end of 2019. We know why, of course. Unprecedented levels of market intervention.
We are being very aggressive, and I think our chairman, Jay Powell, has learned from the experience of 2008. We're moving much faster than we moved in 2008. We're being more aggressive.
And that's precisely why predictions are impossible to make right now. Whether the Chinese president comes to the aid or not of Evergrande, whether the current US administration or EU authorities intervene financially, is up in the air right now. I don't care how good your fundamental analysis is, how powerful your indicators are, how much reason they deduce. The Warren Buffett indicator being simple, yet a sophisticated way to show the lunacy of the US stock market doesn't matter. And you can completely forget Bitcoin cycles. I swear, I hear one more prediction about what happened in the past as a solid reason for what's going to happen in the future, not accepting or coming to terms with the fact that things have changed. And I'm going to absolutely lose it. The YouTube videos, the articles I see that say, this Bitcoin crash is bullish for Bitcoin, is very cringe to me. I mean, don't get me wrong. I like to say that whatever happens is good for Bitcoin as much as the next guy. A leaf fell in my garden. Autumn has come early this year. Must be due to global warming. Bitcoin's energy geographical independency makes it ideal to spur the adoption and usage of renewables. This is good for Bitcoin. See what I mean? But I do stop at claiming a crash is bullish. Even I have my limits. Realistically, the bullish or bearishness of the future depends entirely on the actions, or lack thereof, of just a handful of powerful men, which we cannot see into the minds of. However, let me explain how they could decide to send crypto up like a rocket, like almost nothing we've ever seen before, but how you may not want that to happen. So I just used this clip from a representative of the Federal Reserve, but here's what he said after I ended the clip.
Is there more we can do? Yes. Is there more we may end up doing? Yes. But I think we're being very aggressive, and I think that's the right thing.
And it's that last part that I want to focus on. By their own admission, there is more they can do. Key to Biden's administration was the record $3.5 trillion stimulus bill. So we can assume the last thing he wants on his first term as president is a recession. So to understand what more they could do, what this man is hinting at as a possibility, we need to understand what they have done. Clearly, they supported the stock market, leading to a strong V-shaped recovery in March of last year, which will have helped the employment market also, but this was done indirectly. To achieve this, they lowered interest rates, purchased government debt, and made loans available to buy risky bonds, among other things. But the key thing they did not do was purchase stocks directly, which honestly, if they ever announced that they were going to do, would light a fire of hysterical buying frenzies, the likes of which will eclipse anything we've seen before. With indirect measures, Bitcoin went from 5 to 65 and showered alts with greenery in the process. I could only imagine what direct support would see happen. However, if the government ever chose to do this, it would come with some pretty extreme consequences. The problem is the near limitless legal use of leverage. Everyone would be encouraged to borrow as much money as possible to buy assets, practically punished if they don't. Because if the market ever crashes badly, the government is going to intervene. So why not load up with a bunch of debt, risky or not? Because I can never lose. Obviously, this sounds crazy, but is pretty prudent. Why not take advantage of the situation? Even much worshipped Michael Saylor has done exactly this, issuing huge amounts of debt to be able to buy more Bitcoin than he could otherwise afford to. And then the next financial crisis happens, this over-leveraging of companies basically meaning the slightest bit of bad wind could see them toppling over completely. The solution? The Fed buys more stocks. Everything is saved. Yay. But what happens if most companies go down because of this? The Fed essentially needing to print trillions per day to keep it afloat? Hyperinflation has never historically ended well. So that's why you may not want the Fed to do this. Crypto, goes to the moon. But then the multi-million-dollar crypto portfolio of yours doesn't end up buying you very much weeks or even days after you sell it. And so lastly, it would be appropriate now to share my thoughts on Bitcoin emerging as the world's best store of value and how the economic crash, if it's coming, could be viewed positively as people need a safe haven asset. And Bitcoin is, it's there. I like that thought. I really do. I lie in bed dreaming of it. It makes complete sense. However, for any sort of conclusion or trust that this is going to happen, for me, would require some evidence. Now, you can call me unreasonable if you want to, but I want to see it happening before I place any amount of confidence in this theory. Here's a good write-up by a Reddit user of why and how this could happen. If you want to pause the video to read, by all means, don't. That would be very rude. I am, after all, talking here. Literally under this comment, literally today, stock market down 2%, Bitcoin down 10. Let me put it this way. Anyone that tells you, this time, it's different, bro. They're usually the famous last words before something terrible happens. I am, of course, a believer it could and will likely happen one day. I've even been excited that it was potentially happening in the past, but ultimately these hopes were too early. Hence my opinion being so strong that today is just not that day.
You're not that guy, pal. Trust me. You're not that guy.
All right, that's it. I absolutely hated filming this bleak as hell video, so thank goodness that's over. I'm glad I didn't die. Try that again. Wow. Wow. That he tried to save my life. A leaf fell in my garden. A leaf fell in my garden. Get it together. A leaf fell in my garden.